Hi everyone, welcome back to the Brydge podcast. This is your host Ruffin. Today I'm chatting with Nicole DeTommaso. She's an investor with Harlem Capital, a seed stage fund investing into diverse founders. Nicole is a former investment banker and Forbes 30 Under 30. Today she dedicates her free time to helping others break into VC. If you don't already follow her on LinkedIn and Twitter, it is a must. She has a massive community across channels where she shares weekly job openings and venture, tips like 10 questions to prepare for your VC interview, and things like VC exit models. We get into so many of those topics today, plus Nicole shares much more of her own story. It was so fun having Nicole on the show. I hope you guys enjoy. Hi, Nicole. Welcome to the show. I'm so excited to have you on. I've personally been a massive fan of all the work you do to demystify venture capital and breaking into VC. So thank you for being here. How are you doing? Where are you calling from? And how's your week going?
Yeah, and thanks for having me. I am in LA now. I moved here in October, usually in New York, spent most of my life in New York, and now I switched to the West Coast. But my week is going well.
Amazing. So since you spend a lot of time putting out resources and content for people to learn about VC and to break into VC, I thought it would be appropriate to start the show off by asking about your story. Tell us how you first broke into venture capital.
Yeah, so a bit of background on me. I grew up on Long Island and then was a first generation college student to Columbia. And my journey at Columbia, I assume like many first generation college students, was sort of flailing the first couple of years on what does a career path look like for me? I didn't really even know the options, and ended up quickly realizing at Columbia that I was far more of a econ math type brain than I was reading, writing. And so ended up majoring in econ math at Columbia. And because I was in New York, like 50% of the school went into like banking and consulting, or like tried to recruit for that. And so I didn't really have the best guidance. And so I was striving for that as well, almost in like a herd mentality way. It just seemed what was quote unquote right. And so ended up being fortunate enough to land an investment banking role at RBC Capital Markets in New York. And so I interned with them for a summer and then signed on full time to join postgrad. And when I joined postgrad, I was in the tech, media, and telecom group. And I was there for about 4 years. I went analyst to associate there. And it was a great base for my career. And even sitting in finance and banking, I didn't really know what my career path would look like outside of that, outside of private equity, the traditional buyout funds. And when I was looking for my next role, I came across Harlem Capital on a LinkedIn post. Someone had liked their Fund One announcement. And I went down a full rabbit hole of researching everything about Harlem Capital I could possibly get my hands on. So I listened to every podcast, watched every YouTube video, reached out to Intern alums. Like I couldn't get enough. And that was actually my first jump into the VC world as well. Like I didn't really know that early stage adventure existed, which is part of the reason why I provide so many resources. And so anyway, from there, I basically was fortunate enough that they had applications open for their summer internship. I applied, I got it, and then I spent 6 months with them as an intern and a fellow while I was still in banking, and created a presentation actually to convert that part-time role into a full-time role, and pitched it to the team. And, you know, we can get into that a bit more, but ended up landing the role and started with them in March of 2021 on the investment side. So my journey into VC seems linear, but it was actually quite the journey, because it was like a learning process as well into an industry that I had no connections, no insight into.
Yeah. I also had no idea what venture capital was, especially during college. So
yeah,
share that with you. What like first intrigued you about venture capital and specifically Harlem Capital?
Yeah, you know what it was is I think for me, I like finance. I like the industry. I like working in it, but it can be very soulless in a lot of ways. And I think particularly areas like investment banking. And I fell in love with Harlem Capital's mission. I really did not know that I could stay on the finance side while also supporting people who look like me, working with people who look like me, and doing good in the world, right? Like that to me wasn't a prospect that I could find. And so when I found it, it was like this epiphany moment for me. And basically, the idea of working with like early stage founders was super exciting to me. Like people who really were passionate about what they were doing, like really truly believe that they're going to change reality is mind-boggling to me and so inspiring, which you don't get in investment banking because you're working with mature companies. And then on the other side of that, which is more the mission side of things, because Harlem Capital, for those who don't know, is a diversity-focused fund investing in women and people of color, that basically I could, help the people who look like me, who only get 1 to 2% of capital a year, right? And so coming from investment banking, which is super homogenous in a lot of ways, that was so intriguing to me. And so, it was basically the marriage of those two things that like changed, honestly, my life and my career trajectory.
Tell us how investment banking compares to venture capital, like whether that's your day-to-day or the projects you're working on. And do people need a background in investment banking to go into venture?
So I get this question a lot from aspiring VCs. And my first reaction is to say no. And I do really, really believe that as someone who came from investment banking. So to give an idea of what you do in investment banking, as an analyst and typically as an associate, you sit behind a computer screen and you're the one sort of crunching the numbers in Excel. You're the one doing the pitch decks, right? But you have very little insight into the client-facing work of pitching companies, into the ideas that you show, right? And as I noted before, is like you're working with very mature companies, usually public companies, companies who are very, very large. And you're helping them with sort of their external strategy, whether they should acquire companies, they should sell something off, they should go, whatever it is, go public. But it's very little internal strategy. That's what consulting is, right? And so I think when people say that they need an investment banking background, it's false. Because a lot of the world, at least early stage, and I want to caveat early stage because I think banking could be helpful for growth and later. But for early stages, there's not that many numbers to work off of, right? And like a lot of it is pitching all the time, whether it's to founders, to other VCs, to your network. And a lot of it is just more network based, right? Whereas like investment banking isn't that. You're sitting behind a computer screen. So what I'd say is the soft skills required in VC are sort of the highest quality that you need to have. Whereas in investment banking, soft skills are probably the lowest, right? And so like there's that weird sort of contradiction when people say you need an investment banking background. The only thing I'll say is that investment banking helps you understand what a successful business looks like. It helps you understand financials. It helps you understand how the economy plays into that. It helps you understand exits, right? Like M&A and IPOs, right? Which is all important as you're evaluating investment at the early stage. So I'd say from that perspective, it does help you give that base. But by no means is it necessary because you learn everything on the job.
For people that might not have the investment banking experience, any resources that you'd recommend or point to that can help you understand like exits and valuations?
Yeah, so Harlem Capital has a pretty robust intern program. For those who don't know, we do 3 cohorts a year of about 6 to 8 interns. And we've been doing that for the past, let's say, 5 years. And during those 10-week cohorts, we have a pretty robust syllabus that goes week by week, going from the most basic concepts in VC, from like sourcing, to the most complex, which is usually cap table math term sheets. And we put that out publicly recently, I would say within the last year, and it goes step by step of what we teach our interns. And so I'd say if you're looking for a VC 101 resource that dives into any topic that I learned in investment banking, that's it. And it's on our website. It's our VC guide. You can find it on our blog post section. And I highly, highly recommend checking it out, going through the 10 weeks of it.
Incredible. I'm going to check that out, and I will definitely link that into the show.
Yeah.
I'm curious, you mentioned that when you first started with Harlem, you were a fellow and you were also working full time. How did that go? Would you recommend that for other people maybe trying to break into VC?
Yeah, I think so. So to start, I think VC is a unique industry in that you can participate without being full time. And I say this a lot because there's not many industries that you can actually do that. And I did that as a stepping stone to see if I liked the industry, right? I didn't jump into it full time because there's a possibility that you don't like VC, right? It's probably a very different world than what you're coming from. And so I'd say take the opportunity to take those part-time roles where you can to test it out, and use it as a trial period. I did it while investment banking, which I don't necessarily recommend, because I think investment banking is very, very taxing and requires a lot of hours. I was fortunate in that timing worked out with literally COVID starting, right? So like it was summer 2020. So the world was shut down. There was nothing else to do but work, right? And so I wasn't making that many sacrifices because I was home anyway. And so I'd say if I didn't have that timing, I would not recommend doing part-time with investment banking. But for me, truly timing was just on my side. But for everybody else who doesn't have a ridiculously demanding job and can make some time to do a part-time gig in VC, I highly recommend it before jumping in full-time.
So moving to talk a little bit more about Harlem Capital now. You touched on who Harlem Capital is, but can you just tell us a little bit more about the stage companies you invest in, maybe some examples of companies your team is investing in?
Totally. So as I mentioned before, Harlem Capital is a diversity-focused fund. So we invest in women and people of color at the seed stage, typically. Basically, we started as an angel syndicate investing in, again, diverse founders. And we realized that we wanted to fill the gap in the market that basically is the only 1% to 2% of women and people of color get funding. And we were one of the first funds to actually do it. And so our whole mission is changing the face of entrepreneurship. And so to pull back and talk about how we invest is we are investing out of our second fund, which is $134 million. We write checks about 1 to 3 million, looking for about 10% ownership. And we are industry agnostic. We have 3 industries that we call, or I call internally, our darling industries, which are e-commerce, fintech, and enterprise software. And I would say from who the end customer is, we're usually B2B more than B2C. But again, we are founder focused. I think a lot of seed stage VCs are founder focused. So we do look at everything. But I'd say we have a particular affinity for those industries just based on the team's experience.
And in terms of like investments, what does your team look for? Like what goes into the diligence process? How can, a founder and their company really stand out to the Harlem team?
Yeah, so I think for us, most of our investments are going to be, as I mentioned, founder bets, right? And I think what we look for the most is how they answer the why you question, which I think there's various different ways that founders can do this. But some that come to mind for me are industry experience. Do you have the necessary experience to make this work, right? Do you have insider knowledge? Have you worked with those people? Your network, right? If you've worked in the industry, you probably have a pretty robust network, which means that you're probably going to have the connections you need to get in certain doors, right? Another one is customer knowledge. Were you a potential customer? Are you a potential customer? Did you work with potential customers when you were at your past job? Do you have unique insight into the way that they think and what they're looking for? I think another one is builder mentality. Have you built something before? And it doesn't necessarily need to mean that you had to have built another company. It could be anything in life, right? Like just do you have that builder mentality, which takes every founder needs because it's a hard journey, right? Will you stick it out, basically? And then I think the last thing is sales experience, right? At the earliest stages, founders are usually the sales experts, right? They're the ones leading sales. They don't have a sales team. And so can you sell? It doesn't necessarily mean that you have to have had a past sales role. It just means, are you a good storyteller? Can you convince people of your ideas? Because that's half the game, especially if you're going for VC funding, right? And so I'd say those are typically the 5 ways that we look to find whether our founders are answering that why you question. And then I think in terms of our diligence, we have a pretty standard process that's very robust. So our diligence process is usually 2 to 3 weeks. And by the end of it, we come out with like a 50 to 60 page memo, which is really robust for a seed stage firm. But for us, it's pretty standardized. You know, we include various different sections, but dive into the financials of the company, dive into the market, the competition, public comps. What does an exit look like, right? There's a lot of companies where an IPO wouldn't make sense. So we would likely have to think about acquirers who would be big enough to acquire them. And then the standard exit math, where it's what check size and ownership do we need now, you know, to make this worthwhile and return our fund, right? And so it's pretty robust, but it's pretty standard in that it takes 2 to 3 weeks.
Yeah, 60 pages. That is
60 pages is very
very robust. Yes. Yeah. I'm sure a lot of work goes into that.
We also send it to our founders. I think that's something that's unique to Harlem Capital, is even if we go through the diligence process and we don't write a check, we send you the memos because we want you to succeed in fundraising, even if it's not from us. And this is basically the idea that this is how VCs are thinking about it, right? Yep. And so like, here were our concerns that we couldn't get over. And so maybe the next time that you go out to another VC, you have a better story or better data to sort of mitigate those risks, right? So we also are very external about our memos to help the ecosystem.
What are the top reasons you would say that like kill deals? And then also, since you brought up supporting founders by sharing those memos, what are some other ways you and the Harlem team support founders once they're within the Harlem portfolio?
Yeah, so to answer your first question, I think there's a few things that make it hard for VCs to invest. And I will also say that there are a lot of great businesses that are not VC backable, and it doesn't make them any less successful of businesses. Majority of startups shouldn't be funded by VC money, period. But with that said, I think some flags that are hard for VCs to get over are the TAM, right? We're obsessed with the market size. The reason we're obsessed with the market size is because our number one goal as VCs is to return capital to our LPs, right? We have to make sure, in Harlem Capital's case, we have a $134 million fund. We have to return that capital to our LPs, right? And we can only do that if the market size is big enough for you to return that amount of capital to us, right? Which is usually why you hear the floor has to be $1 billion TAM, right? There's a reason for that. It's because it's math, right? So market sizing is a big one. Another one is the industry that you play in has different exit potentials, right? And so what I mean by that is when you're exiting, you're valued off of where public markets see you based on like multiples, right? So whether it's a revenue multiple or an EBITDA multiple times your revenue or EBITDA. And we have no control over that, right? And so we want to invest in industries where the multiples are higher because it means that you don't have to reach as much scale on the revenue or EBITDA side to have the same outcome, right? And so certain industries that have higher multiples, enterprise software, they're pretty consistently high, right? And so like, that's why VCs are obsessed with enterprise software, right? So I'd say like, when you're considering your business, think about exit potential, right? You want the highest multiples. Other things that kill deals, which are related to these two, are your business model, right? Monetization. Not every dollar is the same that you earn, right? A subscription dollar is far more valuable than a transaction dollar. And the reason for that is because one is recurring and the other isn't, right? VCs are obsessed with forecasting out, right? They want to make sure that you have secure income. If it's subscription, it's guaranteed. Transaction isn't, right? And so subsequently after that, it's like the market also values the subscription higher, right? So you have a higher multiple as well, right? So your exit potential is higher, right? So that I would say like all of it comes down to the exit potential, right? And so like those are just a few things that could kill a deal that you hear often.
And my second question was, for founders who join the Harlem Capital portfolio, companies that you guys invest in, how do you continue to support them past that initial check?
Yeah, so there's a few ways. I think our superpower as a fund is, or I should say, one of our superpowers as a fund is that we have one of the strongest diverse communities within the venture and startup ecosystem. And we really lean on that for our founders, in that we want our founders to help each other. We want them to help the ecosystem, because ultimately Harlem Capital is a small dot in the larger diversity ecosystem, right? So our play is, how do we interconnect everyone? Because we can't be the nucleus. We can't have as much impact if we are always the center. And so we try to really foster that within the community, but even emphasize it within our founders and our portfolio companies. In some ways that we do that is we have a Slack channel where we have daily engagement from our founders. And it could be simple things, right? Like, what insurance packages do you offer, right? Like those unsexy things that VCs probably don't know the answer to, but ask your fellow founders, right? Because they went through it. We also have a founder summit every year, which is sponsored by Deloitte, where we all fly to their campus and we have a 2 to 3 day retreat, bringing in external speakers on topics that are of most concern to our founders, whether, you know, some in the past have been rising CACs, right? Like something that was really hitting our consumer businesses. Others could be just like sales experts, right? How to make your sales process more efficient. And so we do that every year with all our founders. Other things we do, we have something called Harlem U, thanks to Mel, which if you have her on the podcast, she'll talk about. But Harlem U is basically monthly webinars that we have where we bring in, again, experts from, you know, various different firms or operators or founders, whatever it is, talking about one topic. And so we bring all our founders together monthly. And then after that, sometimes we have follow-ups where we'll have roundtables with them so they can talk about what they learned. And then one thing that I really like, and I'm not sure if you know about, but we have something called Culture Carry as well, which is basically where we give a percentage of carry in our fund to all our founders. And the idea there is if one wins, everyone wins, right? And it's a really great way to foster that community and foster togetherness, and really get people to help each other. And it's succeeded. Our founders love helping each other. The fastest response we get from our founders is when we say that another portfolio company founder needs them. And so it's great. And then I think, you know, outside of that, a secret sauce to Harlem Capital is also our media and marketing. And so if you follow any of our social channels, you know that all of us have a pretty big presence. And I'd say we have over 500K followers across all of our channels. So we have like real reach for our portfolio companies. We've gotten them great media placements as well. And then we also have something called the DMC, which is basically agencies that provide 3 million of free marketing to our portfolio companies. And so we sign them up for that and they get help, you know, on how to brand and market their startup at the early days. And so, and then we do all the other, you know, things that VCs do, the financial modeling, the fundraising help. But I'd say unique to Harlem Capital is really that community feeling and the marketing and media.
Yeah. Incredible. And also that idea of culture carry. That's so cool. I did not realize that your team did that. That is so interesting. And it's the annual event at Deloitte University outside of Dallas. I started my career at Deloitte, so went to that training facility a number of times. So I know it very well.
Training facility.
Yes, that's really funny. I'd love to learn a little bit about some of the startups and companies that you've personally sourced for Harlem and would love to understand some of your best tactics and advice for sourcing deals.
Yeah, so this is a big one I get asked a lot, and I think sourcing is one of the hardest things in venture for newbies, but also to sustain. And I think part of that is because a lot of sourcing comes from your network or being very scrappy to find quote unquote proprietary deals, right? Which is very, very difficult in the VC ecosystem. Um, so I think for me, I was actually fortunate in that when I was an intern, I sourced a deal called Cabinet, which is basically an enterprise software scheduling tool for businesses and for EAs, particularly who are managing a lot of different accounts. None of the scheduling software that exists today allows EAs to have such a seamless experience. And so I sourced that when I was an intern, actually. And that was the first ever intern source deal that Harlem Capital invested in. So that was very, very cool. And I mean, that was like 3 or 4 months into venture for me. So I was like elated. I was like, wow, this is amazing. But since then, I think sourcing is a mixture of inbound and outbound, right? Is the way that I look at it. And so when you think about the inbound channels, there's various different ways that you can do it, but a lot of it is through connections, right? And so you have to be networking all the time with other VCs who are seeing similar deals or deals that fit your thesis, right? Hence the reason why VCs are always on calls. Another way to do it is talking to a lot of different founders, right? Who better to know founders than other founders, right? And so even if it's not pitch calls for potential investment, it's just networking with founder communities in general. Again, a lot of calls and a lot of events. And then there's just generally speaking with operators, right? Which is who's working at these big companies who could potentially become a founder in the future, right? So how do we optimize that network? And we're working on that internally at Harlem Capital as well. We just launched something called Founder Launchpad, which is basically trying to mobilize the operator community. So those are like the inbound channels. And then you think about outbound, which is what spaces should I be looking in and reaching out directly to founders, right? I think the obvious ones and good ones for new VCs to try are demo days, right? They have tons of demo days, Techstars, Y Combinator, you name it. There are so many. And those are easy ways for you to just get your investing acumen up as well to see which deals fit your thesis, which ones are interesting to you. So that's a very natural outbound. And then I think ones that I personally like to do, which are a bit scrappier, is I love to go through LinkedIn and look for people who are building something new, Twitter bios of building something new. And again, this is very unique to early stage. If you're a bit later, these tactics might not work, but that's a really unique one where you can reach out to people who are not even public yet. Stealth startup is another one, right? On LinkedIn. And yeah, I think those are basically the ways. And I think one other way that I like to do, and at Harlem Capital we do as well, is we like to look on Crunchbase or PitchBook to see which businesses have raised a pre-seed or a small angel round, because then you know that they're set up to be at the seed stage in the next 1 to 2 years, right? And we'll track them. And so that's another way to get unique deal flow. So I'd say all of it is very difficult because it's all a long game. And that's what makes venture so difficult is you really and all of those sourcing mechanisms require input constantly, right? It never becomes this free-flowing engine, right? It's as if you step away and you are not fostering your network, you're not watering your connections, like that goes away, right? And so also I should mention another big one for me is like media, and another big one for Harlem Capital is media. Right. And I get a lot of inbound deals just because people know who I am through Twitter and LinkedIn and so on and so forth. So there's various different ways to do it. The hard part is trying to be unique about it, right? And trying to find that proprietary deal flow, which I don't know if I've mastered. I don't know, so it's tough. But yeah, that's a long answer for sourcing.
I was going to say, I imagine you get a ton of inbound just because you put out a ton of media yourself. So
Yeah.
how do you think about like kind of sifting through that and understanding like what actually might be a great deal?
Yeah, so I'd say it's interesting, right? Through media, I get a lot of inbound directly, but I'd say most of the time media is beneficial because of the indirect channels, in the sense that I have this saying that I think you win at networking when you can stay top of mind for people in a low touch way, right? And I think that's like what you should aspire to have in VC all the time, because you only have 24 hours in a day, right? So it's like, how do you stay top of mind for people without contacting them all the time? And for me, the way to do that is media, right? And so the idea is that if I'm tweeting twice a day and you follow me and you see my name pop up on your screen, if you know my thesis and you know a deal that you have that would be interesting to me, seeing my name would make you send it, right? Whereas if I never tweeted and I didn't pop up on your phone, you wouldn't think to send it to me, right? And so I think that's what's helped me most in terms of media, and why I'm very active on it as well, is like, it just helps being top of mind for people in this industry. And that's what tweeting and posting on LinkedIn and Instagram and TikTok all do for me. But with that said, there is the direct channel as well, where I get a lot of inbound just because I tell people I'm investing through Harlem Capital.
So true. And I've also experienced kind of that indirect benefits of just like putting yourself out there, being top of mind.
Yeah.
I think there's a lot of power in having like a digital brand and presence on social media for sure.
Yeah.
As we start to wrap things up, do you have like a final piece of advice for people that might be looking to break into venture?
I have lots of pieces of advice, so it's it's a matter of what to share. What I'd say for people who want to break into venture, and I think now, particularly because the market isn't as stellar as it once was, it's a long game and it's a tough process. And recruiting is not easy. I also went through VC recruiting before I did the pitch to join Harlem Capital full time, and it was brutal. It's really disheartening. You never know what you're really doing wrong. It's a really hard process because a lot of it is soft skills, right? And there's not much feedback you can give on soft skills. And so I think it can just be a very discouraging experience. But I'd say stick it out. Like, if you can stick it out and keep going, you will land a job. And I guess like I've just seen so many people feel so defeated and then land their dream job at a top fund. And it took months and months and months, sometimes a year, right? But they're so happy once they've done it. And once you've gotten one foot in the door, it makes your life so much easier. And I'd say, again, start with internships, start with angel investing, start with scout programs, start with the easier things to break into without experience, and then work your way up. And I'd also say, like, outside of the advice to just keep going, some tactical things. Networking is really important in the industry, right? And so to the extent that you can network before you're in the industry, it will be very helpful to you. And so I'd say it's intimidating to network with full-time investors, and it's very hard to get them on the phone. But you can also network with scouts. You can network with angel investors. You can network with interns. All of these people who have one foot in the industry, one foot out. But that at least gets you to have a baseline network, and then you work your way up from there. And so don't think that you need to network with the GP at a fund, the founder of a fund, right? Like, that doesn't need to be the case. Like, start at the lower ranks and then get acquainted with the industry and then keep going from there. But again, and I say this all the time and I tweet about it all the time and I post it everywhere, everything about venture is a long game. It is all a long game. Instant gratification, if you are looking for that in your career, VC is not your industry. And it's the same thing that goes for VC recruiting. Is like, it is a long game, and like, you will start to see your efforts come to fruition over a long period of time, but you're not going to see it day in and day out. So just keep going and do the baby steps to get to the bigger outcome.
Thank you for sharing that. I'm sure many listeners will appreciate that message and good motivation to keep pushing forward.
Yeah.
Can you share a female founder, investor, or leader who inspires you and a little bit about why?
Yeah, absolutely. So when you sent this question over, I was spinning because I was like, who could I say? Like, there's so many people. And the one person that kept coming to mind for me was one of our portfolio company founders, Kat Lau from Stuff. Stuff is a next generation storage company. And she basically founded this company. We invested at the seed stage. And she also last year had a baby. And I am so inspired by women who are seed stage founders, who are startup founders, who also are able to work while being, it feels 20 months pregnant. Like they really do so much. And I just don't know how they're able to get it done. And Kat in particular, she was pregnant last year. She had a baby last year, all while raising a Series A. So she was going through fundraising and she succeeded in all of it. Got investment from top tier funds, raised like a very great A round, got her business, like the business was skyrocketing. Like I was like, how do you do all of this? And she's been able to also stay in press. So if you look her up, Stuff is everywhere. She's on Yahoo Finance, CNBC. She's done it all. And I'm so inspired by just women in general who are able to have such a taxing thing happen to their body and emotional, mental, all of it, while still running a business. It's amazing to me. And so anyway, Kat Lau from Stuff, she's an icon. And we have more of our female founders who are also pregnant or have had children, Cabinet as well. And again, I'm amazed. Absolutely miraculous.
Women are truly, truly incredible. And I've definitely seen Stuff in the media and the press. So whatever she's doing, she's absolutely killing it. So shout out to her and her team.
Yeah.
And finally, where could everyone find you? Where can people find Harlem Capital?
Yeah. So you can find me on all channels at Nic_DeTommaso, which is my last name. And you can find, across Instagram, Twitter, LinkedIn, TikTok. I'd say I'm most active on Twitter. So if you're looking for those daily insights, Twitter is a great resource. And in terms of Harlem Capital, you can find us across all channels at Harlem Capital. And then also I highly recommend following the rest of my team. All of us have sort of niche spaces that we cover within venture. I'd say Jared and Henri, who are the founders of the fund, share a lot about what it's like to fundraise, a lot of that LP perspective, which I don't necessarily have. So I highly recommend seeing that insight. And then we have Gabby as well as Brandon, who talk a bit more about building startups and what it's like to operate one, little tips and tricks for founders. And so I'd say we cover a lot of content across all of us in various different niches. So go ahead and follow me and Harlem Capital, but also follow my teammates. I'm telling you, you will not regret it.
Amazing. Well, I'll make sure to include all of those links, including all of your teammates in the podcast details, so we can all follow and learn a lot more. But thank you so much for being here today. It was so fun learning more about you and your story and venture.
Awesome. Yeah. Thanks so much for having me. This was so much fun.
Thank you so much for listening to this episode of the Brydge podcast. If you enjoyed the show, make sure to rate, review, and subscribe. And for more updates, make sure to follow us on social at Brydge Club. That's at BRYDGECLUB at Brydge Club on Instagram, TikTok, and YouTube.